S&P is coming off its best week since late June. Stocks are mixed as the market tries to add to some of those gains. And investors look ahead to some key data that's on deck later this week. Citi's U.S. equity strategist Scott Chronert's with us this morning. Just raised his target to 6,600 from 6,300. Happy Monday, Scott. Good to have you.
Good morning, Carl.
Is this about an earnings season that's come in pretty strong?
It's about an earnings season that's come in pretty strong. The difference between the Q2 season and Q1 is that with Q1, you tended to see second half numbers come down. That's not been the case with Q2. So what's happened is that Q2 earnings upside is translating into higher consensus. Interestingly, we're starting to get a sense here that the bulk of the tariff-related concerns are mostly priced into fundamentals. You're seeing some less bad is good play through in terms of company guidance, reflecting a less onerous tariff concern than had been priced in a few months ago. Last part of this is what we lose in terms of still ongoing tariff headwind. We begin to gain in terms of some of the potential tax effects coming out of OBBBA.
Right. How vulnerable short term are we if, in fact, some of the inflation data this week runs hot?
So we're still vulnerable. We know we're pushing a fairly aggressive valuation setup. We know that sentiment's quite extended per our Lefkovich index. What we note in our update note is that when you get these extended sentiment timeframes, volatility can manifest itself short term in a greater rate than it can when you're in less positive sentiment setups. So, yeah, we're very attuned to an expectation that as we go through the back half of the year, expect volatility. It's going to be out there. We're not sure where it's going to come from day to day, week to week, but be prepared to buy into related volatility weakness.
What you just said, you said the tax cuts will benefit companies and offset some of the negative impact from tariffs. So does that mean you expect that the companies will eat the tariffs more easily on margins and they won't have to be passed on to the consumer more?
Yeah, Sarah, that's been our storyline for, I think, going on a year now since we first began talking about tariffs. We always felt that you'd have a price elasticity demand issue, company by company, and that we never felt that the consumer was strong enough to really bear the burden of a lot of the tariff pass-through. So our expectation has been for gross margin pressure, and we still think that's the case. What I would point out, though, is that when you look at the companies that are more directly affected by tariffs, and we measure this as a cost of goods sold relative to revenues, we're actually seeing some evidence for those companies that their earnings expectation profiles are starting to improve off of the low levels experienced over the past couple of months.
Meantime, we've made note of some of the names that maybe haven't met expectations on earnings or haven't guided strong enough. They've been punished pretty severely, more than usual, more than ever, actually. And I wonder if that says to you that the market, even at these high valuations and headline levels, remains kind of discerning.
Well, the way we're describing it, Carl, is that you're running in almost two parallel markets. You've got your Mag 7 AI influenced on one hand, the rest of the index on the other. It's really fascinating. Right now, consensus earnings growth for the S&P is for roughly 9% this year. Half of that, literally half of that's from your Mag 7, with the other 493 making the other half. So there is this bifurcation. And certainly one of the storylines as we go into the back half of this year and look ahead to 2026 is going to be a broadening playbook. Sounds a little bit like deja vu. We were talking about this a year ago at this time, but the setup continues to point us down that path. Obviously, I think some Fed ease into the back half of the year would support that as well.
Does that filter down to small, to the Russell, or is that a waiting game that remains?
Well, it's still a waiting game, but it's interesting. Off the April lows, small caps perform more or less in line with the S&P, both of which have lagged the NASDAQ. So, our messaging on small cap is that it's a little bit premature to make a coast is clear, all in sort of call here, but the valuation circumstance is sufficiently disconnected from large cap that you want to start dipping your toes into that water.
Right. Still waiting on all-time highs on that one. Scott, it's going to get interesting next few days. Stay close. See you soon.